Well, there are plenty of mixed signals currently in the GTHA housing market. That's given the downward momentum in the condo market, and many potential home buyers effectively still waiting on the sidelines for more rate cuts. But there are also some other areas that are turning into hot pockets, not food, but neighborhoods you want to buy in. So to make sense of it all, we're joined by Chris Alexander, of course, the president of RE/MAX Canada. Good to see you again, Chris. Thanks for joining us this morning.
Thanks for having me, Nick.
Okay, hot pockets making me hungry, but it's also whetting the appetite of a lot of investors as well here. Let's talk about in this current market where people seem to have opportunities and are investing.
Well, right now we're seeing move-up buyers, move-down buyers, and investors really driving that. You know, we surveyed 83 markets in Toronto, Vancouver, and surrounding areas. About 40% of them showed price gains since the start of the year. But what was really alarming to me is that first-time homebuyers have almost completely disappeared from the market. And I think that's largely due to the stress test. And when you think about when it was introduced in 2017, it was because rates were expected to rise. That didn't materialize for about 5 or 6 years. And yes, it saved us during those times. But I think for the first-time home buyer, having to qualify today at basically 7%, they're at a huge disadvantage. Federal government implemented 30-year amortizations, but I think it's time to probably consider pausing that policy so that we can get a healthier overall market picture.
Are you saying, Chris, that they've disappeared from the first-time home buyers I'm talking about, disappeared from this market or just the Canadian market in general?
The more expensive markets, Toronto, Vancouver, Calgary a little bit, even Halifax, it's really unaffordable. And you think about policymakers, that's all they're talking about right now is affordability. That's the biggest thing on Canadians' minds when it comes to real estate today, and I think it's time to look at that.
And the stress test that you bring up is interesting, of course, because that's interesting in a market where interest rates appear to be going up, but in a time now where we've got clear signals from the central bank. There have been 2 cuts now. It looks like we're probably going to get another one in September. Rates are going down, but the stress test is still going to be on the higher end here. That seems counterintuitive, doesn't it?
Yes, and again, it was good policy at the time. It helped us avoid a massive foreclosures in 2022 and 2023. But I think now with rates expected to come down, we're starting to see a lot of signs of healthier market conditions. That'll be kind of the last factor, I think, for people to get into the market. Okay,
so I want to talk about some of the hot spots, the hot pockets, pardon me, that you've identified in your survey here. It's interesting, Dufferin Grove, Little Portugal, Trinity Bellwoods, Little Italy, University, Kensington, Chinatown, waterfront communities. These are what you're seeing, 54% increase in sales in these markets here. So we're talking about this today. Is it too late, though, to buy into these hot pockets now, as it were?
Well, first and foremost, they're incredible neighborhoods. That's why they've all, and like year after year, those are our hot pockets. The best places to live in the city. There's some context, though. Yes, sales have gone up over 50% in most of them, but you're looking at like 35 sales to 50 sales. Or 60 sales. So there's not a tremendous amount of new activity, but because it's so desirable, you have. There's still opportunity for sure. Right.
A lot of people also kind of look outside the GTA or the 416 market just because it's so expensive. What about in the rest of the GTA? Are there hot pockets beyond this sort of boundary of the city?
York Region, Durham, a lot of that is based on affordability. And, as I mentioned, we're starting to see signs of a healthier return to market. The first rate cut we had in June did nothing. We're starting to see more activity as a result of July. There's lots of speculation that there are going to be more and or deeper cuts this fall. And I think savvier buyers are getting out there now, trying to get ahead of potentially a big influx of returned buyers.
Right on. Okay, we'll watch the market very closely. Chris Alexander, always appreciate the time. Thanks so much.
Thanks, Nick.
Have a great trip.